Let's go. Woo. Welcome back to another video. We're going to be talking about Elliott wave theory today. Elliott wave theory is the pattern that occurs in the market over and over and over again. You can use the Elliott wave pattern in unison with support and resistance and Fibonacci. It is going to be a little bit of a longer lesson, so please have your notepads out and ready to write down exactly what I mark up on the chart. This is some people's favorite type of analysis. For me, I use it with my, I've seen it so many times, I can just count the waves without even marking the waves up physically. So I'm going to go ahead and share my screen, get right into the video, and we're going to go over the slide, of course, first, like we always do. So Elliott wave theory is a popular analysis tool that is used to predict price movements. It is based on the idea that the market moves in repetitive waves or cycles, reflecting psychological patterns of market participants. It was developed by Ralph Nelson Elliott in the 1930s, and it has a wave pattern to it, consisting of impulse waves and corrective waves. So you have impulse waves, corrective waves, and the type of degree of the wave. We're going to first start on impulse waves. So impulse waves are the main trending waves that move in the direction of the larger trend. They are composed of 5 subwaves labeled as 1, 2, 3, 4, and 5. Waves 1, 3, and 5 are upward or downward, and then the waves 2 and 4 are the corrective moves against the primary trend. So to show you guys what I mean by that, I'm going to actually pull up my chart here so we can see what I'm talking about. Okay, so on TradingView, there's a tool on the patterns menu drop down box, and you can see that you have Elliott waves. There's a whole category for it. Elliott wave impulse 1, 2, 3, 4, and 5. We're going to go ahead and click that there. So we have our impulse waves. Our impulse waves is 1. Our corrective wave is 2. Our impulse wave is 3. Corrective wave is 4. And our impulse wave is 5. So you have 5 total waves in a pattern consisting of the Elliott wave. Now, on that slide that I was just looking at here, you have 5 subwaves labeled as 1, 2, 3, 4, and 5. Waves 1, 3, and 5 are the upward movement, 1, 3, and 5. And then you have the corrective waves, which is 2 and 4. 2 and 4 are in the primary trend. Where did it just go? So you have 2 and 4 as the corrective waves. So we're going to start here. This is the basic Elliott wave pattern formation, right? Now, let's say you have that first wave up and you have your 1, and then you have your retracement wave 2. That impulse wave 3 is the largest of the 5 waves. It is almost always the largest of the 5 waves, okay? Now, we're going to take our Fibonacci tool, and we're going to draw from the bottom to the top of 1 and 3. And we're going to look for our retracement wave 2 and 4. So we draw our fib from low to high. We extend it outward. Look where that second corrective wave falls into, your 50 and 618 retracement zone. Now, that used with support and resistance, let's say you have a large support or resistance around that same level. That right there is 2 confirmations, technically 3 with the second wave. You have 3 confirmations to take the continuation buy off of this retracement wave, right? Now, boom, we take our TP to the extension Fibonacci, and then we go ahead and do the same thing. We look for the retracement. So we draw our fib from 2 to 3 and extend it outward. And now we're looking for the same retracement on wave 4. So now we're looking for an entry on wave 4. It drops to the 50%. We have a resistance that becomes a support off of the wave 1. So this is key right here, right? Is that wave 1 impulse creates a resistance that gets treated as support when it gets revisited. This is why it was so important that we went over support resistance in depth and we understand the utilization of it. And so we're looking for an entry off that 5618,382 zone here and the continuation into the extension. I hope that makes sense because this right here can get super in depth. So now let's talk about waves within waves. Within your first impulse wave, within this leg 1, you're going to have 5 subwaves. So you're going to have 1, 2, 3, 4, and 5. And then you're going to have something called an ABC retracement, ABC retracement, and then you're going to have your continued subwaves, 1, 2, 3, 4, and 5. And then your ABC, and then your 1, 2, 3, and 4, and 5. There are waves within waves. So you can see how complicated and intense this can get on the charts. And this is the basic Elliott wave pattern. It can get funky. The Elliott waves do not have to be pitch perfect, and they won't be pitch perfect. They will sometimes be all over the place. You could have a wave 1 here, you could have a wave 2 down here, you could have a wave 3 all the way up here, you could have a wave 4 here, and then you could have a wave 5 here. So for all we know, it could look like this, it could look like this, it could look like this. And so you can see how it can just get all over the place, right? That is why we use multiple confirmations when we're analyzing the market. Now let's look at the downward direction of an impulse wave. We have a 1, a 2, a 3, a 4, and a 5. This is your downward direction Elliott wave pattern, where you have your 1 leg down, your 2 wave correction, 3 wave down, 4 wave correction, 5 wave down. And like I said, same thing. You have your patterns within patterns, your 1, 2, 3, 4, 5, your ABC correction, ABC correction, and then your continuation Elliott wave 1, 2, 3, 4, and 5. So let's go ahead and continue over the slides. And hopefully now that I gave you a representation, now you'll be able to kind of put it together. So corrective waves are the counter trend waves. They are composed of 3 subwaves labeled as A, B, and C. Wave A is a correction against the impulse move. Wave B is a partial retracement, and wave C is the final leg of the correction. Elliott waves also assign different degrees to waves, ranging from the largest to the smallest. The main waves labeled 1, 2, and 3 represent higher degree waves, while subwaves labeled A, B, C represent lower degree waves. Traders aim to determine the current wave count and its position within the larger wave structure. So we're going to start on the daily. We're going to go to the 4 hour, and then the 1 hour, and then the 15-minute. Wave 3 is the strongest and longest impulse wave, and wave 2 tends to retrace 50 to 80% of wave 1. Fibonacci ratios can be used to measure the relationships between wavelengths and identify potential reversal or extension levels. So we're going to get rid of that, and we're going to go back to the chart, and we're going to go ahead and start looking at the actual candlesticks. Like I said, we're going to start on the daily, and we're going to go from there. I'm going to use current price where we are right now in the downtrend. So we are going to be looking at downtrends. But first, I do want to show you an example of the larger Elliott wave impulse. You have wave 1 here, retracement wave 2 here, wave 3 here, retracement wave 4 here, and your impulse wave 5 here. So notice how you have this 5-wave pattern on the daily time frame. You can imagine that there will be Elliott waves within here on the daily. You can see them 1, 2, 3, 4, and 5, right? You can see the patterns already starting to emerge on the candlesticks. I hope you guys are having like a whoa moment right now, because when I first came across this, I had a whoa moment on Elliott waves. Let's go ahead and start here, though. I'm going to put a vertical line here, and we're starting our downtrending motion. So on our daily time frame, let's go ahead and mark up some Elliott waves. All right. So we have our 0 here, our 1 here, our retracement here, 3 here, retracement 4 here, and then our 5 here. That right there is an Elliott wave pattern on the daily. We then have our ABC retracement, Now this is a strong downtrend, but it's still there. It's pattern's still there. So you have one, would be like one A, B, C. A, B, C here. You have your A, your B, and your C. And then you have your continuation of your 5-wave Elliott sequence. So you have your 1, 2, 3, 4, and 5. All right, and now we're currently in a B, C retracement wave. So we're in that corrective wave still, and it's consolidating through this range. So we're on the daily time frame. We're looking at this Elliott wave sequence, right? Let's go down to that 4-hour, and let's go ahead and go back to the left and see what we're looking at on the first 5-wave sequence. The first five-wave sequence was 1, 2, 3, 4, and 5. Okay. Now within that first wave, we have our 2 retracement. Let's take our Fibonacci, draw it from this to 1, and let's see where it retraced to. The second leg retraced to the 50% Fibonacci ratio. So if you're looking for the continuation, you would look for that sell off of either this resistance or the 50% Fibonacci. So when you finally have a support here and it retraces, you're either looking for a sell off the white line or off the 50% Fibonacci ratio. Now it did go ahead, and I'm going to actually get rid of the white line. It did go to the 50%, and we also have a small resistance here that it went ahead and retested off of. Notice how price did retrace kind of small here, and then it dropped down and retraced all the way to retest this resistance and also the larger 50% zone. All right. So let's say you caught an entry here and you write it down, to here. Now we're looking for our what? Our third leg and our 4th corrective wave. You're going to take your Fibonacci tool and you're going to draw it from 2 to 3, and you're going to drag it outward. Where does the 4th leg retrace to? It retraces to the 618, and it retests this what? Leg 1 support level. Notice how it's a support here and it becomes resistance here. Fascinating. So not only did it actually retested it twice. It hit the 50, dropped down, went back up one more time to test the 618, and then finally made that 5th impulse wave to the downside. Man, I hope you guys are grasping this concept here of Elliott waves. Now that we have our 5th leg impulse, we're looking for our ABC retracement, which occurs here. So you can see that we have our A, B, and C retracement wave. And you can actually still take your Fibonacci tool and utilize it here as well. So you're looking for that larger retracement. You draw it from 5 to A, and you look for the buy at 618 for that C leg. Now, if you're looking for the continuation, you can also draw your fib from 4 to 5 and look for the 5618 retracement for the larger wave and the creation of the next wave impulse. Now, let's take a closer look now on the 1 hour. We're still going to look at this first section, and I'm actually going to delete these because it's kind of just a lot of noise right now. So let's get rid of those, okay? Now, on the 1 hour, that larger 5-wave impulse is going to have more data to it. Now we're going to start looking at subwaves. Within our first wave down, we have waves within waves now because we're on the smaller time frame. So we go to our Elliott wave impulse and we start drawing out the impulse waves. You have a 1, a 2, a 3, a 4, and a 5. Within that first down wave, you have an Elliott wave within that. Now I'm going to move this over because we know what we're looking at. I'm going to move that over here. So now we're looking at our Elliott wave impulse to the downside. Notice the Fibonacci stays the same. We draw it from 0 to 1 and we get our what? Our 50% retracement on the second corrective wave. It goes to our extension levels here. And then we look for what? We look for that support at the 3. It retraces 4. We draw our fib from 2 to 3. It does not complete a 50% retracement. It continues dropping. So now we look for our Now that the fourth corrective wave makes a fifth, now we're in an ABC retracement. So that second corrective wave on the daily time frame is now an ABC retracement on the lower time frame. So boom, we mark it up. A, B, and C. So like I said, we take our Fibonacci tool, we draw it from 5 to A, and we look for what? The 50% buy on the B corrective wave. It does get a little complicated. So stay with me, okay? Within the hour time frame, there's even impulse waves on the hour time frame still that you can draw out. Now on the 15-minute, it would look a little more accurate, but I'm just going to show you, and then we're going to go to the 15-minute. So within this first leg, we have what? We have our 1, 2, 3, 4, and our 5 impulse waves down on the first leg. We have our ABC retracement, ABC retracement, and then our third wave down, we have another 5-wave impulse. 1, 2, 3, 4, and 5. Wow, that is good stuff right there, you guys. Whew. That shit's crazy to me. It's so fascinating how the market follows this pattern of waves. The market is just like nature. Nature has an interesting way of interacting with the surroundings, and especially the humans around it. So if you were to think about the ocean, when the ocean is moving in and out, it's a constant pattern. The waves are fluctuating and it's moving in this formation. The market moves in the same exact way. Now, you could have a map. So when the weather changes, the waves of the ocean can get bigger and they can get smaller. The moon, when the moon is a full moon, the ocean waves are much bigger. When there's not a whole lot of moon present, the ocean waves may be smaller. Same thing in the markets. When there's a lot of volatility in the markets, that's mainly because of the moon phases and where we are in the economy. And that's kind of getting too deep into it, but it's just trying to bring it all together to make sense for you guys of why the market moves the way it moves. So let's go ahead and drop down to the 15-minute now, right? So I'm going to redraw. I'm going to go to the daily. I'm going to redraw the Elliott wave impulse that I just drew. And we're going to look on the 15-minute now. So we have our 1, our 2, our 3, our 4, and our 5. Okay. Go to the 15-minute. Hopefully it lets me go all the way back. I don't know if it will, but it should. Close enough. We'll start at the 2-leg. All right. So we have our second leg down, right? Look at all of the Elliott waves forming on the 15-minute time frame. I mean, there's just too many to even count. You have an Elliott wave here. I mean, my goodness gracious. This one's a little more complicated though. So you have your high, you have your low, you have your high, you have your low, your high, and then your low. See how messy that Elliott wave is? Even though it still exists, it's messy. That's why the higher time frame is much easier to analyze. And then we have a 5-wave consolidation. Actually, this is not. I mean, I guess you could say that this is an A, B, C retracement. You know what I mean? Like this is an ABC, but there's still waves within that, which you could mark up. So you have 1, 2, 3, 4, and 5. So you have your 5-wave uptrend now inside your ABC correction. And then you have your continuation. You have your 1, 2, 3, 4, 5, and then it continues to dribble downward. So actually this would be considered the extension of the wave 5. There's no ABC retracement. It's just a continuation. And it continues to go. It continues to go on and on and on and on. So you can see how it can get sort of complicated, right? Now, I'm going to show you how to take advantage of trade opportunities now on the 15-minute time frame Elliott waves. If you know that you're in a second wave to the downside, you know that the market's trending downward, you have a second wave impulse, and it's in a downtrending market, Not that you're going to be able to predict where the third wave is going to end up, but you are aware that it's in a downtrend. If you look at previous support, which is here, and price trades below it, so boom, right? Price trades below here, you know you're going to get a retracement to here. You go ahead and do your you do your 5 waves. So 1. Actually, no, before we even draw that, we're going to take our fib, we're going to draw it from high to low, and we're going to look at our 618. Where does our 618 line up? Boom, right here at the white level. So this is how you take advantage. 1, 2, 3. Okay. So what do? Price drops. We draw our 1 leg. We take our support. It's now a resistance. We draw our Fibonacci from 0 to 1. We highlight the zone with a rectangle. So our 618 and our 50% zone, we mark it up and we look for what? Short positions in this area. Boom. Look at that. Look at that. That is how you trade the Elliott wave. That right there is exactly how you trade the Elliott wave. Fibonacci, support and resistance, and Elliott wave. Let's look here now. So we have our now this wave gets funky, right? You have your 1, your 2, your 3, and your 4 is all the way up here. Interesting. Your 4th, and also this is manipulation. That right there is manipulation. That is news. That is markets. Those are investors manipulating the market. And so this is something where you might get messed up because you're looking for the continuation. You draw your Fibonacci from 2 to 3, and you're looking to take short positions at the 5618, and you get stopped out. You get stopped out here because the market, the 4th wave extends way beyond the 2nd leg, but then it still continues to the downside and creates a 5th leg. That is something right there that you just can't control. You cannot control the volatility of the market sometimes. It's going to be that way for the rest of the time that we exist here on Earth. The market will always have unique movements. And so you move on. You take the trade and you move on. You notice that it did go in your direction and you take the L as a lesson and you move on. So we have our 5th leg, right? So 1, 2, 3, 4, and 5. And then you have your retracement back to the white resistance one more time. And then it creates the 5-wave Elliott impulse once again. You're going to follow that along. Boom. Trades below this 5th leg here. 1, 2, 3, 4, and 5. So what do we do again? We take out our fib tool, we draw it from 0 to 1, and we look for our 618 retracement, highlight it, grab our short position, boom. Look at that. Pitch perfect setup right there. 1 to 2 risk to reward ratio. Doesn't get much prettier than that. Once we have our 3rd leg, we look for what? We look for our retracement again. We draw our retracement from 2 to 3. What do we have here? A 50%. So boom, we highlight it. We get our short position. And we take a short position from the 50%. Boom, another beautiful trade entry there. That is exactly how you trade Elliott waves. Just like that. Just like that. You're just marking up the pattern, pulling out your Fibonacci tool and using support and resistance in alignment to Fibonacci and taking positions in the direction of the overall trend. Woo, that was some sauce, you guys. Oh my goodness gracious. I'm excited, man. I'm excited to see what you guys do with this knowledge. I mean, the amount of money and success stories that's going to be created is unimaginable. The Elliott wave support resistance is one not to is the type of market analysis that not a lot of people get to because they quit early, they don't continue, they never find it, they don't trade it correctly. And I'm just telling you, don't sleep. Do not sleep on this information. If you're new to trading, utilize it. Utilize this information, you guys. if you want to get really in depth too, I'm actually gonna go to the current market price. Let's go to the 1 minute time frame. Look at this. This is the 1 minute time frame. So these pip movements are still pretty good, right? Look at these Elliott waves, man. 1, 2, 3, 4, and 5. 1, 2, 3, 4, 5. You're telling me you can't trade that? You're telling me you can't trade these patterns, man, on the 1 minute? Come on now. Look at this. Look at this. 1, 2, 3, 4, 5. Yeah, that's a tough one there. Continuation. Look at this small ass pattern. Ready? 1, 2, 3, 4, 5. Look at that. Look how many patterns there are right here, guys. I mean, this is beautiful right here. 0 to 1, 3, 8, 2, retracement. Boom. 2 to 3. And actually, you only this wick's really volatile, so you just take it to the top of the on the smaller time frame. You want to take it to the body. Boom, 618 retracement. Boom, huge uptrend. What are we looking at here currently? Right. First and foremost, let me show this. 0 to 1, 382 retracement. Money. 2 to 3, didn't even reach that retracement, so no trade. What are we looking at right now? We have our 1, 2, 3, 4, 5. You have your ABC retracement, A, B, C retracement, and now we have our continuation. 1, 2, 3. Don't know where 4 is going to be yet, but that's kind of what it looks like, right? Man, this is some fun stuff right here. I love this stuff so much. Market analysis is amazing. But guys, that's it for Elliott waves. You can get really in depth. You can use Fibonacci extensions. You can use indicators to verify your third wave, fourth wave, fifth wave impulses. It gets really in depth. And if you want to go further in depth, book a one-on-one and we'll get into it and make sure you're trading Elliott waves like a pro. All right. So I'm gonna go ahead and end the recording here. I hope you guys enjoyed it. Hope you guys took some fire notes, and I will see you all in the next one. Take care.